Does the Fibonacci tool actually work? Well, in this video today, I'm going to break down exactly if it works or if it doesn't work and how I've been using it for the past 6 years to actually make money in the markets. I'm going to explain to you exactly how to use it and how to actually get the right entries from using it as well. So let's get right into it. So when it comes to the Fibonacci retracement tool, there's a few things that we have to understand. Number one is the input. Okay, so first and foremost, if you don't know this tool, if you've never seen it before, if you go onto the left hand side of the trading view, the first, second, third, for me, it already comes up right here. If it doesn't, it's the third one. It should come under the Fibonacci sector. And then you want to click the Fibonacci retracement. Now, I already have my inputs in, but this is what your Fibonacci tool will look like. Okay. Now, before we get into all the inputs and stuff, I want to explain to you the idea behind the Fibonacci tool. So, especially the Fibonacci retracement tool. So, as we know, the market likes to create something called higher highs and higher lows in an uptrend, correct? And then on a downtrend, it's lower lows, lower highs, right? Now, as a trader, we want to get entries. If on an uptrend, we want to get entries around this area. And we want to get, if we're in a downtrend, we want to get entries around this area, right? But the problem with this is the retracement. As a trader, we understand that retracements can be very deep or could be very shallow. And what I mean by this is sometimes, if I just zoom into like this sector, sometimes the retracement could literally be as small as this, and then it will push up and continue its trend. Or sometimes it will be very, very deep like this, and then it will push up. It will still create a higher low. However, it will be very, very deep. And so because of how deep it is, that's where the big move comes out of, right? And so just because it's deep or shallow doesn't mean that the market is going to, if it's shallow, it doesn't mean it's not going to go as high as it wants to go. It can do whatever it wants, right? We're not here to predict and see where the market's going. We're just here to identify where is that entry point. Where are we going to enter? Okay. So for us, we use something called the Fibonacci tool. And what this tool does is every time, let me just kind of every time we get a breaker structure and we create new lows and new highs, so let's say price is on its way to make a new low, a new low, right? When we come from this point right here, let me actually do it so you can see what the Fibonacci tool is there for. Is it creates levels, right? It creates levels on which one of these levels price could react off. Okay, now there's multiple levels, which I'm going to give you the inputs to later on in this video. But the principle of the Fibonacci is that it's not just one singular level that price will react to. There's multiple levels, and we just wait for price to react out of one of these levels. And once it reacts to out of one of these levels, we can then look for entries. Okay, likewise, if the market was going on a downtrend, let me actually just move all this. If we're going on a downtrend, boom, like this. Okay, again, let's say price is on its way back up to retrace. Okay, remember these, I'll actually highlight it for you so you can actually see. From here to here, this area is called a retracement. Okay, so the Fibonacci is kind of forecasting a area or a specific point in the market where price could potentially continue its trend. And so this is the retracement. This is the extension. Okay, I'll actually mark that in another color. This is the extension. We'll put the extension as as red. Extension, and then we got something called retracement right here. Okay, so the red, this is actually really, really important for you to know. Red equals extension. Blue equals retracement. So if you ever hear a trader say, this is the extension of the markets, or this is the retracement of the markets, you now know the extension is usually the area where the breaker structure occurs and where price is continuing to either, in this case, obviously going down or pushing forward. or pushing higher. And then the retracement is just, it looks like it's trying to reverse, but all it's doing is just creating that formation, that market structure that we understand, which is obviously higher highs, higher lows, or lower lows, lower highs. In this case, lower lows and lower lows here, and lower highs here, lower lows here, and we're creating somewhere in this area, we don't know, it's obviously going to be in between these two lines. Somewhere in this area, we are going to create a lower high, and then price is going to go down. Now, the thing is, if we just mark up these two lines, right, we've got quite a big area to deal with. The Fibonacci, what that does is it breaks these areas down into like smaller pieces. So it's like a little pizza, right? We got big pizza, which is the high and the low, and then we cut the pizzas so that we actually have a easier understanding of what happens within this area. And then all we're waiting is for price to, let's say it goes to one of these lines, it reacts, boom, like this. We look for entries, and then as soon as we enter, we're obviously, which is actually fantastic with the Fibonacci retracement tool, the inputs that I put in, it actually gives us take profit areas. Okay, so to give you an understanding of when to use this, you can use this anytime at any time frame as well. It does not matter. The best time frame personally for me is the 5 minute or the 15 minutes. You can use on a higher time frame. However, the higher time frame means that it's going to take longer for the Fibonacci retracement to actually give you a signal. Whereas the 5 minute and the 15 minutes, those two time frames are perfect because it can give you a good indicator of an entry within your session time. So for example, with me, my session time is between 1 p.m. all the way down to 3 p.m. in UK time. So therefore, I'm trying to look for an entry between that area. Now, I don't use a Fibonacci tool every single time. I only use it in certain criteria, and I'll explain to you the criterias. So the first criteria is when the market is at all-time high. Okay, when the market's at all-time high, usually I like to target liquidity levels. Let's say we're over here. There is no, this is obviously gold, there is no other high. So let's say I'm expecting the market to go even higher. I don't have any targets. So what do? I can get my Fibonacci tool and it will project me the targets. That's how simple it is. And secondly, number two, I use this when the market, no, to confirm, sorry. So to confirm that we had a retracement in the markets. Now, what I mean by this is sometimes the market will give me a retracement, but let's say, for example, we're looking at fair value gap. Now, sometimes with the fair value gaps, I'm not actually aware of if this fair value gap is actually going to be valid, especially when we've got fair value gaps stacked up. So what I'll do is I would use the Fibonacci tool to give me kind of like a little forecast and give me an extra confidence that this fair value gap is a perfect fair value gap, and therefore we can get a reaction out of there. And if that's the case, then we can obviously trade and look for entries. Okay. Again, like I said, I like to use this on the 5 minutes or 15-minute time frame. So let me actually write this down. Use the Fib tool on the 5 min or 15 min. Now, the reason why I say this is I've been trading for around 6 years now, and I've tried every single time frame. I've tried the 1 hour, the 30 minutes, the 15 minutes, the 2 hours, the 4 hours, and they all work, by the way. They all work on those time frames. But specifically for me, if I want to get an entry within my session, like I said, 1 to 3, it has to be on that 5 minute time frame or that 15-minute time frame. Rarely I use it on the 50-minute now. Sometimes I use it on the 50-minute. Let's say if I want to, again, 1 or 2 if we're all-time high, or to confirm that we have a retracement in the market. That is something that I can obviously use on the 50 minutes, but majority of the time I use it on the 5 minutes. So what we're going to do is we're going to deep dive into the 5-minute time frame, and we're going to look at some retracements, or sometimes when the market is doing a pullback. Okay. So for example, like here, we're doing a little pullback. Again, this is totally random. And as soon as we get that pullback, what am I looking for? Okay, so price is starting to make obviously lower lows, lower highs, but it's internal from this low to this high. So you can see that the market has created a low and a high, and price has obviously started to create internal structure. Okay, so this is called internal structure. Now, during this process, like on the 50 minutes, you will notice that in the 50 minutes, this is just a low and a high. Okay, it actually looks much clearer on the 50 minutes. Let's actually show you on the 50 minutes. Okay, so what you're going to do is next you're going to get the Fibonacci tool out. Okay, now I'm going to mark it out first and then I'll give you the inputs. Now the Fibonacci tool, what we're doing is we're marking it up from the low to the high of the extension, okay? Not the retracement, okay? And I'm not gonna include retracements in there. So as you can see over here, there is no retracements. It's just blue, 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 okay? This one's black, but it's still not a retracement because this low is still higher than this low, okay? This is enough for me to say, okay, and we're getting three, well, let's say there's 1, 2 black candlesticks. We want to kind of see what happens. Obviously, we've got a good push off over here. What we do is if we're on an uptrend, we mark from the low to the high of the extension. Boom, like this. And as you can see, what does price do? Price reacts out of here. Perfect. I could probably even go on the 5 minutes and have a look. Perfect. Look at this. Big reaction. I can enter long position right here. Keep my stop loss below these lows. This reacted nicely on the 61.8 extension. And then target these golden zones. Obviously, TP1 gets hit. TP2 hasn't got hit, but I can guarantee you TP2 will get hit. Okay, and as you can see, like we barely in drawdown. This is how powerful the Fibonacci tool is. Now, let me actually give you the inputs. So as you can see, I like to keep mine very, very clean. When you first use a Fibonacci, it's gonna have all these different colors. I like it very plain. You can change up the colors. If you're in dark mode, make it white. If you're in light mode, make it black. Whatever you want to do. Okay, but these are the inputs. You got 0, 0.382, 0.618, and then 1. These are going to be our like extensions. Oh yeah, and this one as well, 0.236 and 0.5. I never used to use the 0.236. I only started using it when I realized that we have quite shallow retracements and it's good to just have. Our extension, okay, so these will be our targets. You see how I changed this into gold or orange? These are our targets. So these are the levels which it actually gives us TPs. This is why I love the Fibonacci tools. It literally gives you the entries and it gives you the take profits. Minus 0.27, minus 0.618. Okay, you can see there's a lot more inputs, but I don't like to give myself too many inputs. Okay, obviously I can use, I think we're an all-time high, so there's probably no targets. Oh, there is targets. So you'll see like the golden zones line up quite well with the liquidity levels. Like look, this area right here. I'll actually zoom out as much as I can. There we go. You can see like this area. So it's very close to where we usually keep our targets. But again, this is what we're looking for. Let's go back on the 50-minute time frame. Let's look for another extension that actually gives us all the TPs as well. Okay. So again, what we're doing is we're locating where the market is in a trend. So let's say, for example, right here, look at this. This is actually perfect because this is quite shallow. All we're doing is getting our fib tool out, the lowest point. As you can see, the lowest point is actually over here. However, I'm going to do it over here. Why am I going to do it there? Because this is a low. Actually, no, we can do it here as well. It doesn't actually matter. I'll show you both ways that it works. So over here, you can see, look, respects to 23.6. Now, this is why I added 23.6. As you can see, the 23.6 price literally respects it to the T. Big extension. TP1 gets hit. TP2 gets hit. Okay. Let's just say we enter off this big bullish candlestick. Long position off this big bullish candlestick. We get a little bit of a tracer. Now, where do I keep my stop loss? I usually keep my stop loss below the next Fibonacci level. Okay. Now, again, a good confluence for this is, look, we actually have a FVG. So this is like two confluences of one. We've got an FVG. Price comes out of the FVG. Price also has a really big bullish output out of here. I can actually keep my stop loss. Actually, I like my stop loss right here. TP1, TP2. You can see right here, we've just bagged ourselves 2.77 RR. Okay. Again, this is a very, very shallow retracement. Could price come to any of these other levels? Yes, it can. It can go to any of these other levels. However, in this case, it decided to react out of here. And that's all we need. That's all we care about. Okay. Let me show you one more example. So again, we got an extension right here. What I'm going to do is I'm actually going to get my FVGs out. So we've got FVG right here. Boom. And an FVG right here. Boom. Now, as you can see, we've got two FVGs. Now, I want to know whether price, which one price is going to react out of and which one's going to be a valid reaction. So what do? Get my Fibonacci tool out. From the low of the extension to the high of the extension. Okay. Okay, look at this, right? This FVG is on the 50 extension. Quite strong. However, look what happens. A 78.6. Lovely rejection out of here. We could actually enter off this bullish candlestick right here. I think that's a nice one. Boom. Stop loss below the candlestick of the FVG. We can actually delete this now. Obviously, price just crashed right into it. So, but you see how price crashed into it, and a lot of people will be like, "Oh, price is going to reverse." Well, guess what? It doesn't, because we still have that 78.6. Now, this is a very, very deep retracement. And look, TP1, TP2, TP1, TP2. You can even use this, the high, as a TP1 or TP2. Okay. So this could be TP1, this could be TP2, this could be TP3. This is a 3.4R. And have a look. Boom. Amazing, amazing, amazing. Amazing move. Amazing entry. Obviously, a little bit of a trace, a little bit of a drawdown over here. However, price just scales right into it and just smashes TP. This is what you want to see. This is how you use the Fibonacci retracement tool. So if you want to use this tool, make sure you use it correctly, like how I showed you today. Make sure you write all the notes. And if you want to, I've just opened up actually my 3-day masterclass. My 3-day masterclass, we did it last year. It was amazing. So many traders have changed their life just in 3 days. Crazy. And we actually built so many independent traders out of that 3-day masterclass. So I've been getting a lot of DMs of people saying, can you reactivate it? Can you open it up again? That's exactly what I did. So if you click the first link in the description below, I actually give you my entire system. So the system that I use every single day, the system that you see on when I'm on live, or the profits that I make in the markets, even the losses. I'm not going to be shy about it. If you want to know my system, if you want to know the framework that I use, if you want to actually understand how you can turn this short-term, trying to make money quick, into a long-term, full-time day trading, the best version of yourself, basically. If you want to be part of that, if you want to actually see a transition, become that disciplined, consistent trader, click the first link in the description below and start your 3-day masterclass today. As soon as you sign up, you get into it immediately. It's completely for free, no payments. Literally just sign up and get started. You get my entire framework. I give you exactly the right psychology and how to actually use my framework to the T. Other than that though, if you like this video, if you stay to the end, make sure you subscribe, make sure you like this video, comment down below all the notes that you've written so it can help other people, and I'll see you in the next video.